So the latest prediction for Australian house prices is that it's going to keep going up until the year 2023. And in Sydney, it's gone up by $216,000 in 2021 alone. That's probably more than double of what the regular Australian earns in their 9-to-5 job. Hey guys, welcome back to the channel. So today we have some new property data released by CoreLogic, and in this video I'm going to break it all down for you. So firstly, and this is probably the headline act, is that homes have gone up 2.2% in the last month alone. It doesn't sound like much, but let's take the median house price of $1 million. 2.2% of that is $22,000 in a month. So did anyone make $22,000 last month? I doubt it, and that's kind of the theme of this report so far, is that house price growth is still outstripping wages every month. And that's wages, not wage growth, wages. So for the year so far, the prices have gone up by 10.6% nationally, and for the rest of the year, it's predicted to go up another 21%. And for $1 million home, that's a growth of $216,000, which is definitely more than an average annual salary, which is why a jobless homeowner would have done very, very well this year. Now, the last time we saw this kind of growth was all the way back in 2016. And then temporarily again in the back end of 2019 after the Liberal government won the election. But that was quickly ended by the pandemic, so now it kind of seems like it's really trying to make up for the premature end of that growth spurt. So the fundamentals driving this particular surge is still the combination of the strong economic activity and the low interest rate environment that we have right now. And at the same time, the average supply for home listings is still well below average. If we have a look at this total listings graph again for May, it actually seems to be dipping down a bit, but that's kind of just how it is. You can see all the other previous years in the different colors all dip around the winter months. But this is still quite significant. We're only getting about half the listings that we normally get, and a lot more demand as well, which is all contributing to this massive boom market. And because of this, the auction clearance rates are kept well above the decade average of 64%, usually in the 80s and even 90% clearance rates sometimes. And if you're looking to put in an offer before the auction, hoping to try and stop it going to auction, I wouldn't bother, because nowadays vendors are going straight to auction and the houses are all selling for 10-20% above the advertised price guide in the listings. Actually, that's another gripe that I have with the property market. Why are the price guides always underquoted in the listings? It never actually sells for what it says in the price guide. I think they should just make the price guide the same as the reserve price from the vendor. So that way, if you bid at the price guide, then you buy the house. Simple as that. It really annoys me to see people bidding at the price guide and then the property just passes in because the owner didn't want to sell at that price guide. So why put it in at all? But anyway, that's another annoyance I have. I'll rant about that another time. Now, in terms of rents, standalone houses are pretty much slowly recovering to its pre-pandemic days, but units are still suffering at the moment. For capital cities like Sydney and Melbourne, their rental growth is actually still in the negative region because they rely a lot on overseas expats and overseas students to prop up their rental prices. And that'll probably stay that way for a while, at least until borders open up again. And for that to happen, it kind of needs vaccination rates to be high enough in other countries where they achieve herd immunity, which I think is not going to happen for a good while. Now, on the other hand, the more regional capital cities like Darwin and Perth, they're actually experiencing double-digit rental growths, which is really surprising, which I'm going to take a guess is more due to the new working from home norm. So people are able to move away from the hustle and bustle of cities like Sydney and Melbourne. And Perth also has the mining boom at the moment as well, so that's probably helping their rental market too. So overall, Australia is still well and truly in the middle of a housing boom market that's probably going to last a good while, at least until interest rates get hiked again by the RBA. We've seen that cutting off the JobKeeper stimulus actually had little to no effect on the housing market, and not even minor COVID outbreaks, Melbourne, is doing anything to the market's appetite for more property. So the outlook for the rest of 2021 is still pretty much the same as the first half of 2021. which is really exponential growth. And 2022 is looking like a similar story, but at a gradually slower pace. Until in 2023 sometime, when the RBA might finally do something and start to raise interest rates so that people start to realize that, hey, mortgage rates can go up and will go up. It's actually been so long since the RBA last did that I think a lot of people have never actually seen RBA increase interest rates. So once this happens, eventually, there will be lower market participation, which means that there's going to be lower demand. And that lower demand might finally just match the amount of supply in the number of listings as well. And actually, supply might increase as well because homeowners might start to realize then that if they don't sell now, then they might not be able to get top dollar for their homes for some time to come. But regardless of all of these, if you're still in the market for a home, then my advice to you is this. Go and get something as soon as you are financially able to. Don't wait for property prices to dip, because when it does dip, it's not going to dip as much as you need it to in the time that you spent waiting for it to dip. Because the jobless homeowner that's just been sitting on their property for years, just riding out this boom market, has and always will do better than you with a job. I say get in the market as soon as possible and ride the wave out with them. You know, I've never heard a homeowner say that, gosh, I wish I bought my property later. It's kind of always the opposite, right? And that's because the best time to buy a property was 30 years ago, but the second best time is to buy it right now. So thanks for watching, guys. I hope this was both informative and entertaining. Don't forget to like this video and subscribe to the channel. And as always, I'll see you in the next video.